And welcome. It's Mary Ellen McGonagle here with your Friday afternoon MEM Edge show, the show where we bring you where the action is in the broader markets. And another wild week. We will get into what drove these markets higher, those areas that are outperforming and why, and how you may want to take a look at your more defensive names as we move through these markets. Also, right now, let's go ahead and take a look at some of the news that drove price action last week. There was not a lot by way of economic data. It was very much centered around tariff news and earnings. Those continue to be the two key drivers of those big outperformers. Also, we did see consumer sentiment today. It did drop 8% in March, all about that uncertainty surrounding those tariffs. Not a big reaction. The markets were able to overlook that. And then also the Federal Reserve's beige book came out midweek, and this is a report that is done 7 times per year, and it provides a deep dive into the economy for the Federal Reserve. And again, that uncertainty surrounding tariffs did lower the growth outlook. And also, we did have some key names report their earnings. We're going to take a look at that. As usual, we will also take a look at where the markets closed and some of those key names that are due next week. We have another very big week for the markets as we move through the beginning of this Q1 earnings season. So let's go ahead and take a look at those markets and see where did we close for the week. And here we are. This is a daily price chart of the S&P 500. We had several very key items take place last week. I will tell you, I put out several reports. We had a Wednesday midweek report, Thursday alert report, and also a Tuesday alert report as the markets continued to experience strength after hitting a bottom here in the beginning of this month. So a couple of those key characteristics that did take place on Tuesday, we got what is called a follow-through day. For those of you familiar with Bill O'Neill's policy of looking for critical price action relative to a low and also relative to that volume. It is a system that has marked every market bottom. Now, that said, it does not always move on to be a prolonged bull market. That's something that has to be determined as the market continues to gain traction, but it is one of those critical components as far as being able to wade into these markets. Let's take a look at some of the other components that shaped up last week. We did close on Wednesday back above this key 10-day simple moving average as the markets continued to progress. Thursday certainly was a very healthy day for the markets. We did get that RSI moving into positive territory, so quite constructive there. While the MACD is below this net neutral zero, it is trending upward. And lastly, today we closed back above a very key level for technicians, looking at that 5,500 level. That is your lows from March into April, and this was viewed as a very strong possible area of resistance. And we did close just above it, not a lot, but certainly enough to qualify. So net, we are firming up really quite nicely with these markets. We can also take a very quick look here at the Nasdaq Composite, and you will see very similar characteristics in this index as well. And we're going to take a look at that price action also back above that 21-day, moving even closer to its 50-day simple moving average, a bullish RSI, and then that nice MACD crossover as this index really outperformed again this week, up 6.6%. Relative to the S&P, up about 4.6%. From here, let's go ahead and take a look inside the S&P 500. And quite simply, this chart is showing those stocks, the percent of names in the S&P 500 that are trading back above their 50-day simple moving average. And you can see that we are continuing to advance. We are seeing a nice broadening out in the markets. In this area, as we did see a deterioration, there were consumer staples and those more defensive areas, which really comprise a smaller amount of the markets. But as tech, the biggest sector, has come on very strongly, we are seeing that breadth continue to expand. So that's another characteristic that is certainly worth noting. From here, let's go ahead and take a look at the underlying 11 sectors. And from here, I'm using the first page of stockcharts.com with this sector summary box. From here, we can click onto this candle glance view, and it will provide you with a 2-month daily price chart view. I like to add that relative strength indicator and sort these sectors in descending order. The purpose here is to really get in front of where that relative outperformance is taking shape, with an eye toward your ability to take advantage of that. So what we can see quite simply here is the S&P up here in the upper quartile. Now, these areas in front of it are generally outperforming. Now, it is a view that is not whippy. For instance, you are seeing utilities linger up here at the forefront, but XLU was only up about 0.5% relative to the market's 4.6% move. So in other words, we will see a steady progression one way or the other relative to these sectors. But let's take a look at these stronger areas up here at the forefront. Tech had been lingering down in this weaker area, but we can see XLK up here up 8% last week. And we can see the move, how it has pushed this tech sector back above these shorter term moving averages. We are poised for that green 10-day simple moving average to cross above the 21, and that is a golden cross. It is a secondary signal, but certainly worth noting. And then also we can see with tech that RSI up here in positive territory and pretty decent volume. It did fizzle into Friday, but however, on that Wednesday turn, we did see very nice volume there. Also up here at the forefront, consumer discretionary up about 6.5%. Both of these sectors are now moving very close to their key 50-day simple moving average. This downward moving average can present a roadblock. However, if we do break above it, with that RSI now in positive territory, that would be very constructive. Of note last week is the fact that M7 stocks greatly outperformed the broader markets. We are going to do a deep dive into those names and take a look at why some of these names are outperforming and trending higher. So as we move through, taking a look at some of these other sectors, we can also see XLC, another sector that does have a couple of M7 names in it. And we can see that it has moved back above these moving averages with a bullish RSI. And then moving through, you of course want to be aware of those weaker areas. And these are going to be areas of the market that are not participating as much. So XLE, this is going to be all about the price of oil was down this week, but also we've seen a couple of earnings reports that were not as robust as anticipated. So while energy is generally trending higher, it was up less than 1% relative to the 4.5% advance in the S&P. Now we can see healthcare languishing down here, but we do have a nice double bottom formation, and that RSI is poised to enter positive territory. From here, we are just now experiencing that MACD crossover, black line through the red. That indicates a new uptrend. So while I've been adding tech stocks this week, I am looking very closely at healthcare names that are earlier in their potential upside advance. It's going to be all about earnings in this very still volatile market. You do want to have a sound reason for putting money to work. And as we move through from here, let's go ahead and take a look at a different view of the broader markets. And this is a chart list that I use each week. It's called Weekly Show. And this is something else that you can very easily put together on stockcharts.com. You can add those indicators, those are ETFs in my case here, and really, again, get your arms around precisely where that bullish price action is shaping up. So let's take a look here at this 2-month daily price chart view, again, sorted by relative strength. And we can see gold still remaining up here at the forefront. The group was down about 1%. And of course, this had been a big play due to volatility and uncertainty. We saw a big push into gold stocks, and they have pulled back, but rather orderly. It's just now trading a little below that 10-day simple moving average with a positive RSI and MACD, but it certainly is notable. Another really notable activity here, certainly from my work, is the fact that software stocks have turned bullish. They are back above the 50 and 200-day simple moving average, nice high volume characteristics, and a bullish RSI. This is where we added most of the newer names this past week, and you can see this advance. One of the key drivers of this move into software was ServiceNow's report of earnings after the markets closed on Thursday. And you can see that actually on Wednesday after the markets closed. And then on Thursday, we had that big gap up. Certainly earnings are key, but one of the other primary drivers is the fact that the company cited very strong demand for their AI-driven products. And that was a real boost for technology and then overall AI names. Now, from here, as we move through, I talked about healthcare. This is an area where I will be adding names to my MEM Edge report. It is IHI. It is the medical devices ETF. There are several names that came out with good numbers last week and are looking very constructive. So with this ETF, we're now back above that 200-day with a positive RSI. So this is the type of activity that you will want to be on the lookout for so that you can, again, get in front of these areas that are beginning to advance even more than the Nasdaq and the S&P 500. Now, let's take a look at semiconductors, up almost 11% last week. We are going to take a look at NVIDIA with that M7 view, but with semiconductors, you can see this higher low and now back above that 21-day simple moving average with a positive RSI. So lots to talk about. I'll be doing a deep dive with my weekly report on Sunday, taking a look at semiconductors, what the driver is, and I will be adding a new big cap name to the suggested holdings list. And taking a look here, XRT, this is the retail ETF, and it did underperform. It was up about 2.7%. We did get a positive RSI, but really not a whole lot by way of momentum, generally trending sideways. A lot of that also going to be driven by these earnings reports that are continuing to be released. Now, on this negative front, let's take a look, because this is an area that was very much at the forefront. And after the past 2 weeks, we are seeing volatility continue to decline. We ended at about 25 with this VIX. And if we get down below 18 and really below this 200-day simple moving average, that would be even more constructive, but it is very much in line with this VIX move, taking us back to this period in August with the yen crises and interest rate concerns. And you can see this is that rally phase that we had in August, a little bit dicey from there, but we did advance further given that volatility as it continued to decline. Other areas to keep in mind still are interest rates, and we did see them drop. This is the yield on that 10-year sitting here at about 4.25. We do want to see interest rates continue to decline. That is bullish, certainly for growth stocks, technology, in particular. And last up, let's go ahead and take a look at bank stocks. Now, KRE is the regional banking ETF, and it was up almost 5%. Again, earnings driven. We are seeing these companies come out with good numbers, and there are a couple of names that are really setting up quite nicely in this banking ETF. We did see, again, a little bit of a fizzle into the close, but it is of note that you're aware that that area is also showing vibrancy. From here, I'm going to take us over to the S&P 500. This is a preset list on stockcharts.com. And what I want it to do here is share with you again that ability to sort the S&P by that relative strength metric. And again, really keying in where is that strength, because as the markets continue to advance, these stronger areas are going to lead the markets higher. So what we can see quite simply is the names sitting up here at the forefront, Verisign, Philip Morris, and Netflix, have all reported earnings. Now, VRSN reported their numbers today, and you can see that 8% gap up into a base breakout. Super nice volume there. And also Philip Morris, generally defensive, but we talked about this last week. There is a key growth component to this company as well that is marking its advance. Netflix, of course, came out with great numbers, trending higher. So as you move through this list, here's what you will want to quickly key in. Certainly from my work, I'm looking at the markets pretty much all day, but certainly every day. And when we see these gaps up, these are companies that have reported. CDNS is due to report next week, EWs, and so on. So these gaps up are earnings driven, and they are also driving those names that are up, sitting up here at the forefront. So that's something that you can really key in very quickly upon, looking for those gaps up as you scroll through, and then also taking a look for those possible downtrend reversals. The red line is that 50-day, not the prettiest of charts, but HAS did have a big move on Thursday and potentially reversing that longer term downtrend. So without getting too into the weeds, again, it is an exercise worth your 4 to 5 minutes to, again, really get in front of what is working and then key in on where. Now, in the beginning, I did talk about sharing with you those areas that have been most explosive last week. So what we are going to do is take a quick look at these ARK Invest funds. And these funds were very big performers. Again, we have that RSI up here and in descending order. Now, for me, I want to key in on those stocks, those ETFs that have advanced above their 50-day. And we can see that not all of them have. So from here, let's take a quick look at ARKW. Many of you are aware this is Cathie Wood's ARK funds. They traffic in very, very innovative and fast-moving areas of the market. So 2 things of note when looking at these ETFs. One, you want to be aware of what are those top holdings in this ETF, because it has reversed its downtrend. We have a positive RSI. And why is it advancing more than the markets? Well, let's start by taking a look at this peak in price relative to this trough, this low here at the beginning of April. And I will tell you that this ETF lost over 40%. So that certainly is going to be one element, in the sense that we did get into an oversold position, and that advance may oftentimes tend to have more power to the upside. But the other secondary consideration, again, is going to be taking a look at the underlying stocks that are in the ETF. So with ARKW, let's go ahead and take a look at the number 1 holding, and it will make sense to you again as we move through those M7 stocks as well. But Tesla is the top holding for ARKW. ARKW. And we can see Tesla had a very sharp advance. Certainly today's 10% move really helped quite a bit, all about news relating to autonomous vehicles and less restrictions out of Washington, really helping to propel super high volume here. Nice double bottom formation also shaping up. So that is the top holding in that ETF, and certainly that is going to help with the advance. Another top holding is Robinhood, and this, of course, is the online marketplace for trading stocks and crypto, and you can see that it did also reverse its downtrend up above that 50-day positive RSI and a positive MACD. And then another top holding, one of my favorites, it's a name that we kept on the MEM Edge Report long-term hold list. There were only 2 names. Palantir was one that we held through this bear market. And let's take a look. You can see this gap up into a nice bullish uptrend, certainly a leader in that AI space. Lots of good news coming out. I wrote about it in my alert report this week. Now, also from here, let's go ahead back and take a look at another of these ETFs that are sitting up here at the forefront, ARKF. And this is a FinTech ETF. And you can see again that sharp downtrend trading up here at about 45, and then it got down to 28, so about that 40% area with the decline. But here we are back up above that 50-day simple moving average with a positive RSI. So from here, we can take a look at a couple of those top holdings that are in this fintech area. Shopify, of course, a Canadian company that provides retailers a platform to sell their goods. Not quite reversed with that downtrend, but you can see this sharp advance, a positive RSI. From here, we're going to take a look at Coinbase. Those of you that trade crypto, you may be aware that we've seen a rally in that area. And this is back above that 50-day simple moving average, a positive RSI and a positive MACD. HOOD is another top holding, and you will see that with fund managers. I've talked about it when I ran money years ago, 2 billion, that I would populate several of my 7 funds with the same names if those attributes were there. So here's TOST Inc., TOST. This is a software platform for restaurants, back above that 50-day positive RSI and MACD. That's another top holding of that ARK Finance. Next up on the robotics front, ARKQ is the ETF. And we can see that it too is back above that 50-day. We have that positive RSI, so we can take a look at a couple of the top holdings. And here again, you're going to see some mimicking, but Tesla up here as the top holding for this robotics ETF. And then from here into a couple of aerospace and defense areas. This is KTOS is the ticker symbol, and you really wouldn't know that the broader markets had entered into a bear market and are recovering because this stock is sitting up here very nicely poised to trade higher. ACHR is another name that has reversed its downtrend and then is also in that aerospace and defense area. And then Palantir is another top holding for this particular ETF. Last up, ARKX, that's going to be space exploration and innovation, and just dipping back above that 50-day with a positive RSI. KTOS is a top holding. IRDM is the second top holding, not quite as compelling. So from here, let's take a look at another top holding that looks quite a bit better, and that is Rocket Lab, RKLB. You can see we've broken back above that 50-day. We now have a positive MACD and RSI, and I will leave it there because I did want to take a minute here and dive into these M7 stocks. Now, as mentioned, they all outperformed, including Microsoft and Apple, which were both up about 6%. The other names were up quite a bit more. And I'm highlighting this because oftentimes when you see a move into these mega cap names, Tesla up 18, Netflix up 13, it is and can be viewed as a proxy for sentiment among large investors. They want to get involved in the markets, and the easiest way are in these highly liquid names. And of course, those that are experiencing growth are going to see the benefit the most. So here we are with Netflix trading here at a new high, super high volume characteristics. And there was quite a bit that I talked about in my report. We did add Netflix last weekend. Everything to do with the fact that Netflix, if you go back, let's take a look at a monthly chart. I may have done this last week, but what we can see here is going back to other bear market periods, and certainly '08 into '09 was a very difficult period. That recession, the Great Recession, the markets tumbled for a lengthy period of time. But here we can see Netflix holding up very, very well. And certainly there are other periods as well, that 18 into 2019 bear market. So it does have that predisposition to potentially outperform despite a difficult market, but there are other characteristics at play as well. Next up, we did take a look at Tesla. Let's take a look at Microsoft. They are due to report their earnings next Wednesday. And what I wanted to point out is that we are now back above this 50-day simple moving average, a positive RSI, MACD trending upward. Now, while we are rallying going into earnings, we are well below these peaks in price. So it will be very, very interesting to see how the markets respond to any signs of good news. Also up here, we can take a look at Alphabet. They reported on Thursday, and you can see that today on the open, they gapped up, and we can also see that it closed right at that 50-day simple moving average. We have a positive RSI. This was all about advertising sales, which may help with Meta platforms if they post similar results. Let's take a look at Meta down here in the lowest quartile because its relative performance, you can see that it really fell out of bed. But this week, Meta was up about 9% going into the release of their earnings on Wednesday. So both Meta and Microsoft due to report on Wednesday. Let's go ahead and take a look at other stocks that are sitting up here. Amazon certainly is a name that is among these big mega cap names due to report on Thursday. So a lot of these are exhibiting that double bottom formation, moving above these shorter term. They certainly still have work to do, but are firming up really quite nicely. Go ahead back to that view that we have sorted by that relative strength indicator, and we can see Apple is down there in that lower quartile relative to that Netflix and Tesla that experienced very explosive moves last week. And we'd be remiss to not take a look at NVIDIA. And NVIDIA had a very big move today, up 4.3%. But for the week, it was up over 9%. Today's move had everything to do with a report that China may be reducing tariffs on chip importing from the US. Now, NVIDIA does develop most of their chips in Taiwan, but they do have US facing production as well. But even more importantly is it did provide just a bit of confidence that China may be in the mood to potentially negotiate these super high tariffs. So in essence, we have a market that is continuing to climb the wall of worry. We certainly do still have issues out there relative to tariffs, relative to escalating just a little, but inflation. And next week, we will get that PCE data. This is the Federal Reserve's most watched metric for inflation. So as we continue to, again, climb that wall of worry, and that is something that can take place after a bear market as one of the more constructive characteristics, the ability for the markets to rally while some of the cloudiness has been removed a little bit. by those tariffs, we don't have anything solid to build upon. So keep your eye on these markets, keep your eye on what's working, and have a great weekend. I'll see you here next Friday.